Hello, everyone. Thanks for joining and welcome back. Our guest today is my friend Peter Bookvar. Peter is the Chief Investment Officer with the Bleakley Financial Group. Peter, welcome back.
Great to be here. Thanks, Ivan.
Yeah, it's great to have you on. I wanted to get you on to talk about everything that's happening in the financial markets, everything that's happening in gold and precious metals as well, and then silver. First, though, let's start off with gold. Where do you think we're headed now for 2025? We're, 3 months in, almost 4 months, and you're seeing these incredible rallies in gold. What are your thoughts for the rest of the year?
Well, I'm still very bullish on gold, and but being a bull on gold, so many times we've been teased by uh, it going higher. Now it's actually happening. So we always think every day we're going to have a correction at some point. I still think the destination, or I should say the end point, is still much higher from here, uh, thousands of dollars higher. But I'm just waiting for that day when there's a pullback. But it's pretty amazing how persistent the bid has been. But the bid has been persistent in copper, which is at a record high. Silver closed today just a few pennies from the highest level since 2012. So the whole space is garnering a lot more attention, and whether that's because of the tariffs, fear of tariffs, the movement of metals from one country to another, whatever the reason is, the demand for it is pretty strong.
Absolutely. And I guess, what's your biggest concern right now in the markets? Is it the bond markets? Is it like what's your biggest concern in the economy right now or the financial sector?
Well, it's a couple things in the stock market. I think at least the U.S. market is losing the luster of the AI tech trade. I think the Mag 7, which peaked at about 35% of the S&P, is losing its leadership, and that leadership is in the process of being passed on to something else. That something else is yet to be determined, but at least early on, it's international markets rather than something else within the U.S. market. I think economically speaking, that potentially could flow into the economy if the stock market continues to falter, because one of the main pillars of economic growth in the US has been higher income spending. And if the stock market sees more shaky legs, then I would have to believe that upper income spending decelerates. Also, government spending has been a major lift to economic growth over the past couple of years. And if the administration's attempt to lower the budget deficit relative to GDP actually takes hold, that means there's going to be a slower pace of government spending that's going to be long term very positive, but short term very negative in terms of growth and corporate profits. So I think we're in a major sea change within the markets and the economy, and I think everyone should start paying attention.
Absolutely. What do you think about the current administration? Do you think financially and for the economy, they're doing the right moves, the wrong moves? What do you think about the tariffs? Overall, in general, how do you think it's been going so far?
Well, a couple of things to that. I think on the tariffs, uh, I'm somewhat supportive of the reciprocal concept that a lot of countries have excessive tariffs on us relative to what we have on them. So I'm okay with sort of leveling that. What I am not for is just spraying tariffs on steel and aluminum and maybe copper and autos. I'm not for using tariffs as the tool to reshore. I know that's what they're trying to do, uh, but I'm afraid of the unintended consequences of trying to reshore an industry like autos, where a car goes back and forth in terms of parts and accessories multiple times.
Right.
And we built out this tremendous auto industry throughout North America. And yeah, on paper, it sounds great. We want to produce more in the US. But if it's going to raise the price of a car to the extent that the average consumer can't afford to buy it, well, you can build all these auto plants, but they're going to be mothballed if you don't sell enough of them. So I think there's just a dangerous way that they're playing this, and so that I'm really not necessarily on board with. I am on board with the cuts to government spending and bringing getting rid of a lot of waste, because we know that always happens throughout the history of government, and deregulating the economy I think is well needed. So I would say I'm on board with some things and certainly not on others.
As you know, I'm a big fan of gold and silver, so I can't think of a better platform to partner with than Gold Republic. Gold Republic sells and stores physical precious metals in a simple, secure, and safe way with a buyback guarantee. You can access your portfolio 24/7 via their unique app, which is available for iOS and Android. And the best thing is, I can give you a 20% discount on the transaction fees with the code SILVER20. The link is in the description below. Check them out. Yeah, absolutely. Now, at the Bleakley Financial Group, what do you guys offer? What are the main benefits about the financial group?
Well, we're a wealth management firm, so we manage people's money, high net worth individuals, other institutional money. So it's really just growing and preserving capital and providing a wealth of financial services to them.
Okay. And right now, are you seeing like, are you moving people away from the tech stocks, your clients, or like, what is your main objective right now? Are you moving them more towards gold, or what's the markets that you're looking at?
So one of the portfolios that I manage, it has been, I have been preparing for sort of this switch in markets. So I'm very overweight international markets, very overweight commodities, particularly precious metals, but also liking oil and gas stocks, uranium stocks, gold mining stocks, agriculture. I think, and maybe I said this to you last time, but the investing playbook that investors have used so successfully over the last, call it 5 years, I think should be thrown in the garbage.
Yeah.
I think that this shift in market attention is not just a 1 or 2 month thing. This is potentially a multi-year thing. And if you're going to be looking for returns, I think you need to be looking in other places than from, again, what has worked so well over the last couple of years.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Right. Now, what would be your main piece of, I guess, not only advice, but what would your guidance for any of the new investors or new people in this market who are watching this channel who have just joined recently? What would be your advice to them in it's such a crazy market and such a unstable time? What would be your advice to them?
Well, like I said, I think that investors have to understand that markets go in very long cycles. And what works over a long period of time in a cycle, when I say long period, maybe 10, 15 years, even 20 years, uh, usually after that outperformance, there's a switch and a baton is passed to new leadership. And I do think that we're on the cusp of that. Economically speaking, I think recession risks are rising. I talked about if the stock market continues to fall, you're threatening upper income spending. Government spending is going to be a drag. And there's a lot of attention on the direction of AI spend.
Right.
AI spend is still very robust, but if the rate of change starts to slow, which does seem possible, then that has been a very strong pillar of economic growth. If we lose that, then there really aren't any other places to hang your economic hat on. And I think the recession risks really start to grow, which then could lead to a Fed rate cuts, and we'll see how they manage tariffs in response to that. So bottom line is this is a very different year shaping up to be than what we saw in 23 and 24.
Yeah, absolutely. What do you think the Fed's next move is? Rate cuts, rate increases? What do you think their general direction is moving into for 2025?
They definitely have an easing bias. I think right now they're still trying to figure things out. They seem to be in this hall of mirrors with economic policy and how to manage it and what the impact of tariffs are going to be. And it's going to raise prices maybe one time or not, or maybe there'll be a flow through that'll be longer than one time. But then
Right.
there's negative economic consequences and how they're going to balance this. I think they're just completely confused, as are a lot of us confused. And I think they're just going to wait and see. That said, I do think there's an easing bias there, and I wouldn't be surprised if they cut rates in May, but telling the markets that don't get used to a huge succession of rate cuts, but maybe a tweak here and there.
Absolutely. Now, Peter, I really love for everyone watching this to connect with you. Where can they find you? Where can they follow your guys' stuff?
Well, in addition to managing people's money, I also write a daily newsletter called the Book Report on Substack, so they can read what I write by subscribing. And on the wealth management side, they can learn more about us at our website at bleakley.com, which soon will be changed, so more updated.
Yeah, absolutely. And as the market progresses, or as everything comes along in the gold market and the financial market, I'd love to have you back on. And you said the website is changing soon, so yeah, I'd love to have you back on to update everyone. Do you have any
Great.
idea what it's changing to, or you're just keeping that?
It'll be a surprise.
There'll be a surprise. Nice. Okay, well, we'll get you back on to talk about it.
Thanks,
But
Ivan.
yeah, Peter, such a huge, thank you to yourself and everyone at Bleakley for for you coming down to speaking with everyone in the silver and gold community and the financial market. And as the market progresses, love to have you back on.
Great. Thanks a lot, Ivan.
Talk to you soon.